There has been a lot of panic in the market lately. Actually, the day I'm recording this, there kind of isn't. It's actually a pretty optimistic day. However, just generally, the market hasn't been doing too well. The S&P 500 has been down. You know what stock is not panicking at all, though? It is Kroger. Kroger has been doing well in that same time frame, right? We're flat over the month when we've seen a lot go down. We are up over the last couple months and a half. I think it was the 18th. That was like the day things started going down, February 18th. From that, we are up. We dropped a little bit, but since then they had an earnings. We've done well. Kroger stock is doing fine. No one is panicking over here in Kroger land. Why is that? Well, there's a number of reasons. The reason Kroger's been holding up so well is because mainly what they actually do. The most important thing in business is what you're actually selling, and what Kroger does, retail, that sort of stuff, is going to do just fine in a bear market and just fine in a recession, generally. Now, of course, I'm not saying the stock's going to hold up very well in a recession when we are at the bottom, when everyone is selling, when 401ks are getting liquidated. Every stock goes down, even the ones that are best positioned and even do well during recessions. That's just how it works. There's not enough demand, the bottom falls out. But in a prolonged recession, in a bear market, what Kroger does is going to do just fine, because what they sell, it doesn't get hit that hard. What things that get damaged in recessions, specifically luxury goods, let's say like Carnival cruises, things like that, things people don't actually need, because it turns out when you lose your job, when money's tighter, you start cutting back on the luxuries and start focusing on the necessities. What Kroger provides is a lot of the necessities. So, and in a bear market, people turn towards value stocks. This is just the reality. They get scared. They don't want to hold the risky, small tech company that's done very well and has a high PE. They just don't want to hold that. They view it as too much risk. So the second being, other than just what they do, it's viewed as a value stock. It's also valued as a value stock, believe it or not. 17.75 PE. That seems kind of high. That's historically right around the average company. However, in today's market, even where we're at, the S&P 500 is hovering around 25 PE. This is not what I wanted to click on. I think it's here. Yes, and our forward PE is even lower, right about 14. So it's valued right where you would expect a company like this to be, even in this market. It's got a decent valuation. It's been growing well, clearly. 5-year performance, 116. It's actually outperforming the S&P 500 in a 5-year time frame. So it's performed well. Its valuation right now is cheap compared to the overall market. I would say it's valued like an average company. And it's viewed as a value stock. The core business and what it does is going to do good. And you get a decent dividend. Now, it's not a crazy high dividend. It's not the 2, 3, 4, 5%. It's not a dividend stock. However, this is a dividend that's higher than average. It's higher than what the S&P 500 will give you. It's solid, and you can, take that capital and move it else. Like I said, it's not like awesome. It's not like this Vici 5% REIT thing, but it's still something better than average. So what we're looking at, like I said, looking at a cheap company that has performed well, pays a decent dividend, and it's going to hold up in a bear market. In my opinion, it's very important to be diversified. I love tech. I cover a lot of tech on this channel, but it's important to hold companies like Kroger, value companies, because when everything is going perfect, you want to hold a lot of tech, because tech's generally going to outperform. It's historically outperformed over the last 15, 20, 25 years. It's done well. It's the future. However, the market isn't always hot. We see that. There's a lot of worry. There's a lot of panic, and companies like Kroger are going to do well. And now you might say, what about these other companies? There are plenty of other companies in this space. However, some of them like a Walmart and like a Costco, I think they're good companies, but they are not valued like value companies. They just aren't. At least last I looked. Let's take a look. I know Walmart had PE in the 40s fairly recently. Let's see how it has performed. So yeah, we can see its PE is 36, so it's down a little bit. See what the forward PE is, 32. Obviously, there could be non-GAAP things throwing off. Let's just assume there isn't. How has it done over the last month or so? Yes, Walmart is basically tracking the S&P 500. Now, I'm not saying you shouldn't invest in Walmart, but Walmart isn't going to do as good of a job protecting your money in a bear market, or certainly in a recession. Even though it's a business that's going to hold up well, it's not valued like that. What you are buying into with Walmart is a company that is growing its revenue, growing its profit, growing its influence in the specific market, the specific industry that it's in, not the stock market itself, the specific industry it's in. And something like a Costco, which has done incredibly well as a growth stock, not as a value stock. Its PE is in the 50s. Let's take a look. And obviously, like I said, there can be some things that throw it off. We aren't going that deep today. Its PE is right around 50. You're virtually double the market. It's obviously done very well, but over the last month, 6 months, in 18th, it fell. It's falling from, it was 1,000. It's fallen significantly. It just has. It fell even more from this. It's fallen about 12%. Costco is great. I'm not telling you to not buy Costco. I'm not telling you to not hold Costco. What I am telling you is Kroger is better positioned to protect your money in a downturn. If there's a huge recession, obviously it's going to get crushed. Every stock's going to get crushed, and that's when you want to put as much money into the market as you can. That is a different story. So I like Kroger. I do. I own some. I own it as a value stock. My hope is not that it performs like a tech company, like a Walmart, like a Costco in the short term. That's not what I expect it to do. Now, if it does perform in another 5 years, it's up 117% again, I will be very happy. Like I said, I do not expect it to match the S&P 500. I do not expect it to go up 300% like I hope one of these other tech stocks out, like an AMD, right? I don't expect AMD to, but there's a possibility that it does. Same thing when you're buying into NVIDIA. You hope NVIDIA does well. Do you expect it to go up 300% in another year? No, that's a little unreasonable. But if it does, you wouldn't be that surprised. That's kind of why you're trying to hold on to it. And you can pick any number of stocks to do this. Kroger, there is no upside like that. You're not going to go up 300% in 1 year. If you do, it's probably because you drop down to 20 a share because there's a major recession and they're just doing not good. You don't see value stocks recover that much, go up that much, unless they're basically valued at bankruptcy or dramatically below where they should be. That's just how the world works, guys. I'm telling you, that's how these companies are valued. Kroger, I think is going to do well if there's a bear market. If it continues to do well and tech really gets slaughtered, goes stagnant, drops another 10, 12%, I wouldn't mind taking some money outside of Kroger, balancing it, putting it into some tech. I'm mostly buying tech right now. When we were seeing highs in tech, companies like, I don't know, let's pull up the NASDAQ. What is it? QQQ. If we take a look at the NASDAQ, well, actually, it's continuing to go up, but a lot of the I'm very heavy in the semiconductor space. A lot of them are hitting highs right around here. And this was the time I'm like, I'm not really comfortable with that. I'm going to put some money into value. I started buying Kroger, all that. And obviously, we actually are down from then, although definitely not off of all-time highs. All-time highs were back in February. But when tech is doing amazing, you can still buy into tech, but I highly recommend you put some of that money into value stocks. Be diversified. If it's going to help you, because instead of everything looking red, it's like, okay, I have Vici and I have Kroger and I have Cigna, and these stocks are holding up well. You aren't 100% of your portfolio is just getting absolutely slaughtered. Of course, in a recession, I've already said that like 3 times, that's going to happen. But anyways, that's all I really got for this video, guys. I like Kroger. I think I've made the case for it. I've done it on this channel a number of times. I think it's a good stock. I think it's a good value stock to hold. They've been performing well. They've been growing their business. They're going to perform well in a bear market. I'm not saying we are going to be in a bear market, but if we are, this stock is going to do well. But anyways, I appreciate all of you for watching. If you enjoyed, like and subscribe. I'll catch you next time.